Still, there's plenty of money in the markets now. Some say too much. Our correspondent Timothy Pope spoke to one of the men in the middle of it all, Calvin Tang, Vice President of Vantage Capital.
Calvin Tang, welcome to the program.
Thank you.
Now, nobody can deny that we've had quite a wild ride on the A-share markets for the last couple of weeks. We saw the Shanghai Composite gaining ground, looking likely to break through 5,000 points and then dropping by 320 points in a single session. Are investors really heeding now regulators' warnings about volatility and exposure in the markets?
I think that the market is not paying much attention to the warning in terms of speech, but instead they're looking at what the PBOC or the central bank is doing. If the PBOC is trying to drawing the liquidity from the market, it may be the end of the party. But if we look at the economic data, the economy is still slowing down. There's no recovery sign for the manufacturing, the employment, the inflation. Probably the party is still not over yet.
Do investors understand some of the risks that we're seeing in the markets at the moment, like margin financing, which is at more than 2 trillion yuan at the moment?
I don't think they really do understand the risk. Look at the margin balance. It is 1.9 trillion renminbi already. Comparing to the total market capitalization, it is already 3.5%. Okay, this level of ratio, it is just slightly below the level in US in 1929, or Hong Kong in 1987, or other Asian markets in 1998. Recalling the financial crisis in those areas in those years, we should be scared. But I don't think the market alert with this ratio. Everyone is still trying to, we can see the margin account establishment. There are a lot of newcomers starting their new margin account here in this week. So I think they underestimate the risk up ahead. And it is quite normal. It is a common social phenomenon that the people overconfident about the stock market and they underestimate the risk.
Talking of underestimating the risks, are we going to see a 2007 style bubble burst? You know, we still talk about the 530 catastrophe. Are we headed for something similar, or are things really different this time around?
Well, I think it is not fair to compare the current situation with the history. After all, it is all different. Through the textbook, we usually understand that when the economy is growing, the investor confidence is growing as well, and then the stock market comes up. But this time it is different. The economy is slowing down. But the government needs an easing liquidity situation in the whole country, and then they push the liquidity into the market, and that's why the stock price comes up. But what you mentioned is about the bubble. It is a social epidemic involving extravagant expectation for the future. If we apply that definition into the Asian market, yes, there's bubble. Because the Asian market participants, they're expecting, they see the past price increasing for like 100% in a year, and they expect it would go up and up again. And that's why they try to leverage their investment for 2 or 3 times. By that point, that is very dangerous. Because you can see that there's a very severe problem in China. It is the price limit. So when the stock price goes down to the lower boundary of the price limit, they will suspend the trading. It is very dangerous. Because the price limit is limiting the marketability of the stock. But at the same time, when you trade with margin, there is a risk of margin call. Margin call forces you to sell the stock immediately. That requires marketability. If everyone got the margin call, but at the same day, the trading is suspended, you can see that would be a disaster. So I think if someday the bubble really bursts, that would be a huge disaster if we do not handle it well.
Where do you see the markets going by the end of this year? We've seen forecasts of 6,000 points, even 8,000 points or 10,000 points. Are those realistic?
We are in this uptrend, and we can see that it is a crazy market. The investor has very high confidence with the market. It would be quite dangerous for us to predict the peak. But alternatively, I would recommend to monitor the economic indicators like the data, the PMI, the power generation, and as well as the inflation. If there is a recovering sign, the central bank may try to draw away the liquidity. After all, the whole uptrend, the situation what we are looking at right now, it is mainly driven by the liquidity. So if the central bank withdrew the liquidity from the market, that may sound the end of the whole uptrend.
Calvin Tang, thank you very much for joining us.
Thank you.